I've been watching a lot of different velocity banking videos. I've got some myself to show how it works. So, two things. Does it work? Well, yes, it does. Is it as powerful as some people make it out to be? No, it's not. There's a lot of numbers thrown around. It can be very confusing. I have videos showing velocity banking for mortgages, for credit cards, and explaining how it works and how it doesn't work. But two things that I've seen on a lot of these videos, which are driving me crazy, I need to point them out because they're kind of glossed over and they're wrong. I'm going to point out two different things. Maybe you've seen this. First, this is how it's usually shown. You have a $10,000 credit card debt. You want to get rid of it. All right. And they say, for example, you have $3,000 in income every month coming from your job. Okay. Of that $3,000, $1,000 goes to pay your rent, and you have $2,000 in expenses, food, groceries, whatever. And they say you have zero cash flow. I'm not exactly sure what they mean by this, other than I think they mean you spend all your money and you have no money left. And then they say you have a $400 credit card payment. Okay. So how this works is essentially you move your money that you get every month, that you get paid, onto your credit card, all of it, that you can be used for expenses. So you can't move the money that you need for your rent because usually if you use something like a credit card, you'll be charged a fee. But for other things that you can use a credit card for and you're not charged a fee, you move that amount. So the $1,000 is going to stay in the bank for rent. The $2,000 is going to be used to make a payment on your credit card. Okay, now you're thinking, that doesn't make sense because now I need to make and pay my expenses. You'll just pay it with a credit card. So the money doesn't come out of the bank, it comes out of here. All right, so follow the math. Take the $2,000, make a payment. What does that do? It takes your $10,000 credit card payment, and it lowers it by $2,000. Now it's $8,000 on your balance. During the month, you have to use the credit card to pay your expenses so the balance goes back up during the month. All right. So if out of the $2,000 was $1,600 for expenses, and $400 of it was the payment, that's what I'm assuming, then you'll only spend another $1,600. So you'll go from $8,000, you'll add $1,600 paying for your food, your groceries, your gas, whatever, and you're back up to about $9,600. Okay, that makes sense, right? Because you started with $10,000, you made a big payment, but then you bought stuff, you ended up with $9,600, it's a difference of $400. Well, the payment was $400. That makes perfect sense. The whole reason you do move the money over is that you're trying to get your balance as low as possible. So your average monthly balance is lower. It's not $10,000, it's somewhere between 8 and 10. So the interest at the end of the month, this is 1 month, you're going to get interest. Instead of having interest on $10,000, you'll have interest on something, let's say $8,800 as an average balance. So the interest, I just made this up really quickly, is like, say, 200 versus 170. That's the whole reason you would use this velocity banking. It's just lowering the interest because you've lowered the balance. But what I've seen, this drove me nuts, was I saw someone who said, you know what, don't worry about putting in the interest. We're not going to use that in the calculation. We're going to keep going. We're just going to keep doing this. I'm going to show you how fast you're going to pay it off. But don't ever worry about the interest because you can just go get another job. Go drive for Uber. Or go get another part-time job. Or go get a side gig selling t-shirts. And so we just won't put that in the calculation. Okay, they glossed over that. That's a big deal. If you're trying to get rid of your debts, whatever it is you're trying to do, you need to put all the math in there. I don't understand why someone would explain a method, and then part of the method is go get another job. No, that's not part of the velocity method. You add the interest in. So it does make a big difference when you put that interest in every month. If you leave it out, it's going to show it as paid off faster and give you the false impression that this method works a lot faster than it should. That's why they left the interest out, and that's not right. So the first thing is interest has to go in, and it's not really a pay your debt down method if they're talking about just go make more money. That's a different method. That's the go make more money method. All right. The other thing that I thought was interesting, this is the exact same example. This one is just a complete misunderstanding of basic math. Same thing. You got your $3,000 in income, you save $1,000 for rent, and you have $2,000 for expenses. I saw a video where they said, well, you've got zero cash flow. You have a $400 monthly payment on your credit card, but because you don't have any extra money, this $2,000 is going to food, gas, health insurance, whatever. This $400, you don't have enough money for this payment. So here's what you're going to do. We're going to solve it with this velocity method. Okay, this is not true. I'm just joking around. So they take the $10,000, same example. They move the $2,000 for expenses over. So it lowers it to $8,000 because you made a payment of $2,000. All right. Then during the month, you had $2,000 in expenses. What does that do? Well, since you're using your card, it adds $2,000. So you took off $2,000, you added $2,000, you're back to $10,000. And then at the end of the month, you've got to put in the interest, right? But in this method, they said that you didn't have $10,000, you had $9,600. Okay, they subtracted $2,000, and they added $2,000, and they didn't get $10,000, they got $9,600. Okay, that math is wrong. Take $10,000, get rid of $2,000, add $2,000 back, you're back at $10,000. And here was their rationale. And this is why some people think it works so quickly. Is they said, this is what's so great about it. You had a $400 required payment on your credit card. You made a payment of $2,000. So therefore, the reasoning is the $2,000 payment you made satisfied the fact that you had a $400 payment. Okay. Yes and no. Technically, the bank says you have to give us $400 this month. Technically, you did. You sent in $2,000. So the bank says, great. We wanted $4,000. You gave us $2,000. You're good to go. That's true. But then they said, so that means, and this is the part that's wrong, that means that you actually only owe you're at $9,600 because you satisfied that $400 payment by making this, and therefore it went back down. So it went down to $9,600. Well, no, it didn't, because your expenses were $2,000. You put another $2,000 on the card. You made a payment of $2,000, you added $2,000, you're back to $10,000. Yes, the bank says you sent in a payment, but then you went out and charged another $2,000 worth of stuff. The only way it would have gone down to here is if you didn't charge that much. You didn't charge $2,000. That's the only way it would have worked. You would have charged $1,600. If you had only charged $1,600, then yes, you'd be down to that amount. But that's not what happened. So just be wary when you hear them say, I found you $400. You didn't have $400 for the payment, but you do now because you satisfied it by doing this. Yes, you did. And yes, you made your payments. And it goes down to $8,000. But if you turn around and go to a bunch of stores and spend another $2,000, you're back up to $10,000. That's basic math. Don't fall for this reasoning. I hope this was helpful. I just wanted to point these things out because I hate to think that some people believe that this is actually what's happening. They start implementing this method and they say, wait, I'm back up to $10,000. Yeah, that's how that works. Unless, of course, like this example, the $400 is part of those expenses. I hope this was helpful. Please subscribe so you can see more of these videos. I have lots of videos to help get you out of debt. My philosophy is that the banks don't care about you. The government doesn't care about you. You've got to get your financial house in order. Getting out of debt will help you do that. I hope this has been helpful. Thanks, and have a great day.